Here for Am I Rich? And sorry I've been away for a little bit. I've been sick, but don't worry, I've been hunting and I have been looking for great deals. And I think I found Chase. I know it's not a very small company, it's JP Morgan Chase. It is probably the world's biggest bank, at least it is by market capitalization. And it is probably the 6th or 8th largest bank in the world by assets. Now, most of the biggest banks by assets are in China, and the way they calculate assets might be a little bit different. So it is still one of the elite banks in the world, if not the elite bank in the world. So what do they do? Well, what does JP Morgan Chase do? They're basically a bank that's into everything kind of bank related. So personal finance, corporate loans, derivative trading, you name it, they have their hands in most banking kind of things. Now they trade under this ticker symbol JPM, and they have a stock price currently sitting at $104.63. That gives them a PE ratio of 11.6, which I think is fairly cheap. Usually most stocks are between 18 and 22. So 11.6 is fairly cheap. Now there might be reason for that. Maybe people are worried about, the economy crashing, and so they've already baked in a lower price. But it's earnings, if they can maintain them, that's pretty reasonable. So, and they are expected to continue those earnings. Because if you look at the forward price to earnings ratio, it's 10.6. So it's lower, so they're expected to grow and grow their earnings. So pretty cheap PE ratio from my point of view. Now it does depend on sectors, but generally speaking, this is still a pretty reasonable PE ratio. Now the price to book ratio is 1.3. This is probably in the range of cheap, or maybe at the very least, reasonable to cheap. And so I don't see this being a bad thing for JP Morgan Chase's stock. The dividend, 3.1%. Not bad. It's not amazing, but for a big bank, it's kind of, reasonable, and not a horrible dividend anyways. Now, and it does grow, and the banks, typically continue to grow. So it's one of those, in the future, if you held on to this for a long time, it would become more and more substantial dividend. Very likely. Now, its 5-year growth rate for its intrinsic value has been about 13.2% per year, which for the last 5 years, which is pretty good. It's probably as good as the market in general, maybe a little bit better or very close to it, which is a lot better than most banking stocks. Most banking stocks are probably closer to 9% or less. So this is a very good growing bank. And considering its size, maybe it's because of its size that it's able to find investment opportunities that help it grow this big. But it is growing quite well. And this is something that's probably nice about it. So if you did invest in this and it is cheap, then you might be able to expect a faster return on your investment than other banks. So, what is the positive case scenario? Why do I see this as cheap? Well, it's a fairly simple situation. The reason I see it as cheap is, now I know that stock price was cheaper in December of 2018. It got down into the $90 range, maybe the lower 90s, and now it's at $104.63. So it's gone up about maybe 10%, about 10% or so. But I think anytime it's been valued this low relative to its intrinsic value, it's generally shot up closer to like 30% in a year. So I still see this having a lot more potential for growth. So my positive case scenario is it's very cheap. It's probably as cheap. It hasn't been this cheap since maybe 2015, aside from December. And before that, every time it's been this cheap, it's basically gone up, 20+% in a year. So I do see this as probably near the bottom of where its price would go. So I see that as the positive. I see it as probably having pretty good growth for a bank. And its dividend's not bad, so even if you hung on to this for a long time and it grew, you probably get a nice growing dividend. Other positive cases for this is people like Warren Buffett buy into this. Now, I know you should do your own research, but honestly, if Warren Buffett, he knows about banks, he knows about investing. If he's buying this bank, it's probably not the worst investment you could make. And on top of that, this is also one of the banks that is kind of considered too big to fail. So because it's the biggest bank in the United States, if the United States sees kind of a banking crisis, it's very likely that JP Chase will be bailed out. So you do see this as a very low risk kind of stock. At least I see it as a very low risk kind of stock to own. And I see, because it's cheaper than usual, I see it having a higher upswing than usual. Now that's my positive case scenario. Pretty simple, basically cheap. It's a bank. I mean, they're not overly complicated to figure out. Sometimes they could be if they're, you know, very risky investments, but because it's of its size, you might have risky investments, but it might not be the dominant factor in it. Now, that says you should always do your own research. I mean, if you look at their annual reports, they basically say their biggest risks are political. Like, they got a tax break maybe from this administration, but if the new administration comes in and decides they should give more money back, or, you know, tax regimes are going to change, then you could see some changes in their you know, revenue or their earnings growth. So the negative case scenario, pardon me, the negative side to this stock that I see is basically, you know, the economy could slow down or have a crash. So if you had, they did mention that there could be an economic slowdown by 2020. If that does happen, the bank probably won't do as well. So you could see it kind of, the price stagnate for a while, or go down a little bit. But that said, I mean, or their earnings, I guess, could also stagnate. But that said, I mean, most companies are kind of in the same scenario when it comes to the stock market. So if there is an economic crash, they could also do poorly. The other bad negative thesis for this would be they could, you know, have another banking bubble or something. I don't really see that. I see a lot of bank stocks is actually undervalued at the moment. So I don't know that that would really happen, but it could. I mean, maybe they have a lot of risky loans out there that people aren't aware of. And in that case, yeah, it could. Suddenly you could hear about they bet the farm on something horrible and they're going to lose all their money. I think that's very unlikely considering the way they've been running their business so far. And because of the last financial crisis, we kind of see, you know, a little bit different actions, not too much, but a little bit different actions in how they run the banks. And also the government is likely to bail it out. So I don't know. Now, if it did bail it out, maybe they would try and take, you know, assets, or you might lose some equity in that investment. So those are kind of the downsides I see to it. I see very low chance of this happening. So I do see it basically as a very low risk. You know, the worst case scenario is you had to hang on to it for a long time, but you'd have likely a growing dividend. And the better case scenario is, you know, 20-30% gain still throughout the year, still 30% dividend. And, you know, it's a bank, so very safe. You can keep it or get rid of it later if you want. That would be the way I see it. But I'd love to know what you guys think. Do you think JP Chase is still a good deal at this price? Do you think maybe the forecast for them is wrong? Maybe they're going to, you know, lose in their earnings. I see that as very unlikely, but maybe you guys out there have, you know, a different point of view. I'd love to hear your thoughts and comments. Feel free to leave comments down below. Otherwise, you know, I'll try and keep doing more frequent videos. Pardon me, I've been sick for a little while, and I'm trying to get up to speed so that I can do more in the future. But that said, thanks for watching. Let me know what you think, and we'll talk to you in the next video.